We're continuing with the payroll text, and we're looking here at premium pay for overtime. The Federal Labor Standards Act, the FLSA, requires at least 1.5 times employees' regular hourly pay rate for each hour that an employee actually works above 40 hours for the work week. And we're talking about worked. We're not talking about vacation or sick days. It's above 40 hours of work for a work week. Now, a work week is defined as 7 consecutive days or 168 consecutive hours. But it need not be Monday through Sunday. It just needs to be consistently applied. The employer needs to use the same 7 days over and over. So if they're going Tuesday through Monday, then week after week, that's what the employer should be using. Excludable now would be vacation. So we're going to exclude any vacation time, days, hours. We're going to exclude holiday pay. We're going to exclude sick pay. These are not hours actually worked. Paid commuting time to and from work are not hours actually worked. Prohibited is applying one work week's overtime hours to another work week to avoid paying overtime. So that's not allowed with the exception. Can't have a rule, but what there's an exception. An exception would be in the healthcare and the public sector employees. How's a salaried employee's regular hourly rate of pay calculated? Well, we can take annual pay, the yearly pay, and divide by the regular hours worked per year. We can take the monthly pay, divide by the regular hours worked in a month. Weekly pay, divide by regular hours worked each week. And we can take bi-weekly, which is every 2 weeks, and divide by the regular hours worked on a bi-weekly basis. Now, here's an example. We have premium pay for overtime. We have Serge's son is getting married, so he arranges to work at the factory 48 hours this week and take off 1 day next week. His regular hourly pay rate is $24 per hour. How much must he be paid for this week and for next week? All right, so as we look at this, the overtime pay is to take $24 times 1.5. That's 1.5 times, or 36. Another way to think of this is he's going to get the 24 plus half of the 24, which is 12. 24 plus 12 is 36. All right, in week 1, he's worked 48 hours, and that's just work. It's not vacation, holidays, sick. It's just work. So take the 40 hours times the 24. Take the 8 hours above 40 times the 36 overtime rate, and when you multiply and add, it's $1,248 for week 1. Week 2, he's not working a 40-hour week. He's working 8 hours less, so take 32 times 24 straight time pay, and it's $768. Now, Serge's employer may not take that extra 8 hours in week 1 and hold it over to week 2 in order to avoid that overtime pay. Here's another example. We have Marina. Marina's work week is Monday through Friday. She is out sick Monday and Tuesday, but is given 16 hours of sick pay for the time. To make up for this, Marina works 36 hours Wednesday through Friday. If Marina's hourly pay rate is $20, how much must she be paid this week? Okay, now she only has to be paid overtime by the employer for hours worked in excess of 40. So we're going to take the 16 hours of sick pay, the 36 hours worked, add its 52 hours straight pay, or 1,040. Marina's not entitled to overtime pay. Premium, let's see, we're looking at Joe. Joe is paid $500 for a 40-hour work week. This week, Joe works 50 hours. What is Joe's overtime pay rate? What is her total pay for the week? So $500 per week times 52 weeks. We'll annualize this, get her salary of $26,000 on an annual basis. Then we can take the $26,000, divide by, and there are 2,080 hours in a work year, in a year in which you work 40 hours per week for 52 weeks. So that's $12.50 per hour. Take the $12.50 times 1.5 to get the overtime rate, and that will be $18.75. Now, 40-hour week is $500, as stated, and then 10 hours above a 40-hour week times the overtime rate of $18.75 is $187.50. We add it to the 500, and therefore Joe's pay for the week is $687.50. Now we have James. James is paid $1,200 for a 32-hour work week. This week James works 42 hours. What is James's overtime pay rate? What is his total pay for the week? All right, he normally has a 32-hour work week. However, overtime says it's for hours above 40. So we're going to take $1,200 times 52 weeks. That's $62,400 per year. Take $62,400, and we're dividing the number of hours for James. We have to take and recompute. It's 32 hours a week for 52 weeks, or 1,664 hours. So his hourly rate is $37.50 per hour. Now, the overtime rate, we're going to take the 1.5, multiply times 37.50, and that gives an overtime rate of $56.25. Now, we're going to take the 32 hours times 37.50 is James' normal $1,200. He worked an additional 8 hours, taking him to 40, but it's at straight time pay, regular pay. So 8 times 37.50 is $300. And then he has 2 hours above the 40 at the overtime rate of $56.25. So 2 times $56.25 is $112.50. So when you add all of this together, his pay for the week is $1,612.50. And this is gross pay. Now, the following employees are exempt from overtime unless there are state laws more favorable to the employee. And if that's the case, remember that you have to apply which is more favorable. Okay. The exempt from overtime would be executives that are paid at least $455 a week. Administrative personnel paid at least $455 a week. And these are persons actively responsible for establishing and enforcing company policy and general business operations. Also exempt from overtime, professionals who do advanced work in science or learning and earn at least $455 a week. This includes those computer systems professionals that earn at least $27.63 an hour. Also included in this list of exempt employees from overtime are outside salespersons, and these are persons who regularly and normally work away from the employer's place of business in order to make sales calls. Now, let's transition to hiring employees. We have some paperwork. We have processes to follow. So employers must obtain from new hires a Social Security number, an SSN. Those that do not have an SSN, a Social Security number, are required to obtain one by completing a Form SS5 application for new Social Security card. Also, the new hires have to fill out a Form W-4, and you're going to find copies of these forms in your text, either in the front or there'll be a group of forms at the back, so you can take a look at these. Also, you can go to the website, www.irs.gov. You can go to Social Security website. You can obtain these forms, current forms, on the internet. A Form W-4 is required of new hires. It's an employee withholding allowance certificate, and what it does is it provides the data to the employers on that is utilized in how much federal income tax to withhold, and state income tax, and city income tax. So we're going to have that. Some states will require their own withholding allowance certificate. Others will simply use the federal Form W-4. An age certificate will be required from those within 2 years of the legal age they are allowed to work. And then sales tax exemption certificate, example, when your state has reciprocal agreements with neighboring states. Now, a Form I-9 is also required, and it will be completed. You've got the section 1. The employee will fill in, needs to provide his or her name, address, DOB, date of birth, SSN, Social Security number, and signs an oath that he or she is legally able to work in the United States. So they have to have, if we've got somebody, an alien from another country who is not a U.S. citizen, they're going to have to show proof their visa allows them to work in the United States. Section 2, reviewed and signed by the employer after viewing and recording documents to substantiate the employee's identity and the employee's authorization to work in the United States. So in order to verify, and these are listed on the I-9 form, you're going to need to examine just one document from List A. So you can look at List A. Or if you're using List B and C, you'll have to get one from List B and one from List C. So here we have List A. The acceptable documents include a U.S. passport, and it can be expired or unexpired, because to obtain a U.S. passport, you have to have shown proof you're a U.S. citizen. Certain unexpired foreign passports may work, permanent resident card, and an alien registration receipt card. Now, from this short list, and there will be more there when you're looking at the form, but from these common ones, the employer need to examine only one document that will verify both the employee's identity, that they are who they say they are, and that they are eligible to work in the United States. And usually you write down, which form, you write down the number of the passport. I've seen it to where the employer will even take a photocopy to keep in the file. All right. If you don't have a document from List A that's presented, then you have to have one document from List B and another document from List C. List B would include the following acceptable documents: a driver's license containing a photo, a school ID card with a photo, voter registration card with a photo, U.S. military card or draft records. So if you've got one of those, you're good. We just need to go to List C then, and List C includes U.S. Social Security card, and I'm talking the original, not a photocopy. All of these would have to be the original, a birth certificate from the state, an original one, a U.S. citizen identification card. So if you're using List B, you've got to use something from List C. You have to have two. And once again, you would be writing down like the driver's license number, the state, and maybe taking a photocopy. A Form W-4. All employees are required to complete a Form W-4. Federal Withholding Allowance Certificate. The W-4 provides an employer with the necessary information, the data, to withhold federal income tax from that employee's pay. It may also be used for withholding for state income tax and city income tax. Now, prohibited, this is prohibited, not allowed. Employers cannot just withhold a flat dollar amount or a flat percentage of pay. An employer cannot say, well, I'm going to withhold $20 each pay period, or I'm going to withhold 10% from each pay period. No, we need the W-4 filled out, and then we have to use the table, the percentages, the guidelines provided by the IRS. Permitted, this is allowed. Employees can ask to have an additional flat dollar amount of federal income tax withheld. So you go by what the table says, and if you feel like that's not enough when you're filing your tax return, you can go back. The employee can go back to the employer, to the payroll clerk, and say, on the W-4, I'd like to have an additional amount withheld above what is required. Until a W-4 is submitted, an employer must withhold the federal income tax as if the employee is single with zero allowances, so that this would take the maximum amount out for federal income tax. Employers should not accept a W-4 that is incomplete, is altered by additions or deletions, contains information the employer, the payroll clerk, knows to be false. And keep in mind here, the employer, the payroll personnel should refrain from giving tax advice on how much the employee should withhold. You can explain the data that's needed, but do not make suggestions on how many, for example, on how many exemptions to take. You can refer the employees to the Internal Revenue Service's Publication 505 on the IRS website, or refer them to their tax preparer or a financial consultant. All right, if an employee wants to change the number of withholding allowances, then a new W-4 is required to be completed and submitted. Employers are required to implement a W-4 at the start of the first payroll period ending on or after the 30th day from the date that a W-4 is submitted. All right, so if one is provided at the end of April 30th, then the first of the payroll period ending on or after the 30th. So if they're paid monthly, it would be May 30th. If they're paid on some other schedule, then you're going to have to take that into consideration. Employers are not required to submit W-4 copies to the Internal Revenue Service unless, of course, the IRS requests one be sent in. An employee may claim exempt from withholding, write exempt on line 7, only provided that the employee had no tax liability the previous year, and we're talking about a calendar year, and expects to have no tax liability in the current year. Therefore, if they're truly exempt, they stayed exempt, no federal income tax will be withheld. An employee who claims exempt is required to file a new W-4 each year by February 15th. And if this happens to fall on a weekend or a federal legal holiday, it has to be submitted to the employer by the next business day.